How are you, my friends? In this episode of videos, I'm going to be revealing to you guys how to properly use a Fibonacci. And most of you does not even use Fibonacci. Like, you might see it in your trading view and be like, what is this used for? That's why most of you ignore it. This Fibonacci has a lot to play in our trading journey. And as soon as you understand it, as soon as you save yourself from losing money in trading. And one of the powers of Fibonacci is we understanding the 50%, the discount zones, and the premium areas where we're supposed to be buying from. And as soon as I discovered the potential effective power of Fibonacci, I started making apply of it in my trading. And there is nothing I will do without applying Fibonacci in my trading. Why? Because Fibonacci helps to eliminate a lot of noises. Guys, there is noise in this trading. There's a lot of noise in trading that when you start trading, you feel like, wow, man, let's make this money. But today in this episode, I'm to show you guys how to properly use Fibonacci and when to use Fibonacci. Now, these are the things I'm going to be telling you. How to properly use Fibonacci, when to use Fibonacci, and when not to use Fibonacci. Because with this, you can be able to know exactly where to trade from. And one of the things that Fibonacci helps us to do is this. Number one, using Fibonacci, it helps us to know where our discount zone is. Let's assume, for example, you want to buy something from the market, right? So you as a buyer and you want to sell, definitely you don't want to be buying on a premium price. So which means you'll be waiting for an offer to buy what? On a discount price. So with Fibonacci and with the use of Fibonacci, it helps us to know where our discount prices are. With the use of Fibonacci as well, it helps us to know where our premium areas are, because we sell from the premium areas and buy from from a discount level. But what we don't want to be buying is this. We don't want to be buying at a 50% zones. So in this video is where I'm going to be showing you the effective use of Fibonacci in our trading journey, because with this you can be able to eliminate a lot of noise. And please do not forget to like and subscribe to our channel, and also share to most of your friends that are traders as well. It doesn't matter if it is SMC or support and resistance or ICT, whatsoever thing you're trading. Trading goes with what? Principles and laws. And what I want to let you know is this: whatsoever strategy you're trading, apply it in every chart you're trading. It works, guys. It works. So don't have this mindset that, oh, the only thing I know is ICT. I don't know if ICT is working on stock. I don't know if ICT is working on crypto. I don't know if ICT. Bro, your strategy works in every chart. So guys, stay with me and learn more on how to use Fibonacci in a proper way. Let's dive into our practical aspect of trading.
On this. Number one, the first rules is this: we have to make sure that we are able to spot our higher highs and our lower lows. These are very important things. So after spotting our higher highs and higher lows, so let's assume that we are having a bearish structure, right, to the downside, and we're supposed to do what? To make sure we find our highs, right, and also find our low. But we have to make sure that there is a break of structure first. Then there is something people always get confused. This takes us to our number 2 rules on using a Fibonacci retracement in a proper way. Now, this step, when you follow this step, guys, trust me, you're going to eliminate a lot of noise in your trading, and this noise end up blowing our account 247. But when we get to understand it, we apply them one after the other to the basic understanding on how to use a Fibonacci retracement. So, and the second rule is this: when you are on a bearish move, okay, you always pay attention to the internal highs when they are formed, because these internal highs are a reversal points. So when market comes back to your internal highs and pull them off, this is a sign that the market is about to reverse. Then you have your what? You have your low or your highs in place. If an internal high is not yet formed and moved out, don't pull up your Fibonacci retracement. Because when you pull up your Fibonacci retracement, trying to retrace or trying to check where the 50% of the move is or where the premium and discount level is, you're gonna be in a very, very bad condition of trading and you're not gonna like it. So the third step is this: after you finding out where the swing lows and swing high is and where the internal highs and low is, then the next step is for you to pull up your Fibonacci retracement tool. Then you pull it from your swing highs to the major swing lows, right? So, and it looks like this: you pull up to your Fib from the major swing high to the major swing low. So for those of you who are confused on how I use my Fibonacci tool, guys, don't be confused. I moved all of my tool, like everything, I moved it out. So if I'm to play it back to what it used to be, this is how it looks like, right? Yeah, this is how a Fibonacci tool looks like. But for me, I don't need all this long thing. I don't need all this noise. The only thing I need is just my red line. And the red line determines where my what is. The red line shows me my what. It shows me my 50% move, and it differentiates the premium from the discount level. This is just what I want to see. So I don't want to have this too much Fibonacci tool whereby it is too long and you try to find 50, find 60, find 70 something. No, I don't do that. So that's why everybody have their own ways of trading. So with this tool, it has helped me to eliminate a lot of noise. So brothers and sisters, this is what you have to understand. So when you have that internal high being formed, okay, let's say internal high is formed, and we eventually come and move that internal high that was formed. So then we have what? A change of character. So this is whereby you have now been sure to do what? To pull up your Fibonacci from the swing low down to the swing high. So this becomes what? This becomes what we are searching for. So whatsoever price that is here, you have to know that from this zone is a discount level, but from this zone to the upside is a premium level, right? So let me show you guys how I edit my Fibonacci. I just need only six, just only one move I need, just only one I need, and that is the red one. I don't need this, I don't need this. Let me show you guys how it looks like. I don't need the price, okay. I don't need the levels. Then the only color I need is a red color. Yeah, I don't need this long trend line. I don't need this red long trend line. And yeah, and the numbers are too big, and the line is too thick. I'll make it very tiny. So this is how my Fibonacci looks like. So what do I do? This is how I do it. I make sure that my cursor is on the below, then I pull it to the end of the swing highs and make sure it's exactly there. So now we have our what? Now we have our Fibonacci on our trade. So where do we want to be taking trade from? Any trade that comes here, trust me, I will not be interested in taking a trade for a sell through this zone. I will not be interested in taking a trade there. Why? Because this zone is very cheap. So let's assume that you want to buy a product from the supermarket, right? Or you want to buy an iPhone, and the iPhone is selling for $5,000, and you want to buy for with like you want to buy on a discount price, right? So you that wants to buy on a discount price, you know that that $5,000 might be big for you, for example. Then your aim might be okay when it drops to 3,000 or when it drops to 4,000, you'll be buying. So you don't want to buy, you don't want to be buying from there, right? So now let's change it to a bearish move. Now, when you are buying a product, you want to be buying from the discount level, right? And you want to be selling in what? In a premium price, right? So right now we know that our market has switched to what? To bullish from the lower time frame. That is whereby the internal lows is moved, right? So what do? We want to be selling from these discount levels. So because 50% zones are zones that are there for the meeting point of the sellers and the buyers. And when sellers and buyers are meeting up, do you know what they do? They end up liquidating every man in the market. You see the spike going down and going forth. This is whereby liquidity is moved and grabbed. So most of the times when you trade from your 50% zones, trust me, you're going to be having a lot of noise. Crossing the red line, this is where I start paying attention to where I'm supposed to start taking my trades from. So this is how I use my Fibonacci to retracements. So let's see it on a live trade. And so this time we're going to be back testing the previous data and seeing how we are possibly going to meet up with all these rules that we have given to you. So number one is mapping out your highs and lows, your major swing highs and major swing low. And number two, you wait for an internal structure to be formed and to be broken as well, showing us what a change of character. Then three, you pull up your Fibonacci to from the major swing high to the major swing low. When price comes above your red line, that is to show you that the price is either in premium size or in discount level. So, and that is what we're going to be doing now. So, and what is the market currently doing? Let's remove all the two. Now we see the market that the market keep going high. We printed high highs, higher low, high highs, and higher low here, higher highs, and higher low. So what do we see the market doing? The market keep printing high highs and higher lows, but guys, you need to see where the market break the structure properly. If you look at this end side, you see that that was where the market broke the structure properly. Look at that place very, very much. You know, when you're on a lower time frame, that's where you can consider all these little moves, right? Yeah, that's where you can consider all these little moves. But where you are on a higher time frame, consider the general move which takes it from there, right? So all these ones are just little moves that are happening. So what do we see? So let's say we fast forward and move this out from the market. What do you think we are to see? Now our internal low is formed, which is here, right? Which is here. So if market happen to move our internal low, that is where we can pull up our Fibonacci tool and measure it from the swing high to the swing low. So now the market has moved our internal swing structure. We have our swing structure here, which is our major low, and we have now our major highs here. And mind you, if your internal high is not moved, you can't be able to spot your swing high, because the internal high has to show you that the pullback has begun. before you can be sure of pulling up your what, your Fibonacci 2 from your what, from your swing high here to your swing, from your swing low to your swing high, right? So it makes it more easy. So now we see that the price is at what? The price is as a discount level where we want to be buying from. So what do we pay attention to? This is what I'm going to be showing you in my next video, how to properly pay attention to these zones and take your trade perfectly well, right? So let's fast forward this market. I'm not going to tell you guys what we're going to be looking at here. So in our next video is what I'm going to be showing you properly. So fast forward, and we came back. Oh, unfortunately, this is where the market stopped us. So this is what we're going to be doing. We're going to fast forward this market to here, then go back to 4 hours and follow the order flow. Yeah. So let's use 4 hours. So if you can look at here, we have a proper break of structure from here, right, to the downside. And then some people will be like, why did you cancel all this thing? So why I canceled it, because these are weak, and market was able to close to the downside, right? So here we have our what? We have our highs, and we don't know where our low is yet. Why? Because our low has not shown us what? A change of character that it is about to pull back. So let's fast forward this market, and now we are sure that we have our low here, because what? We have now a change of character. Now some people will be asking, what is this triple colors for? Because I have 3 colors on my screen, right? I have the bearish move, the bullish move, and another color on it. So that color is what we call what? An inside bar candlestick. So most of you that might have read the candlestick Bible must have understand what an inside bar candlestick means. So in my next video as well, I'm going to be treating and showing you guys how an inside bar candlestick works and what is an inside bar. Because guys, trust me, this thing is very, very helpful. And I will show you how I use my inside bar as a target in the market. So now we have a change of character showing us that the market is about to pull back. Then this is where we confidently pull up our Fibonacci from the swing low to the swing high, right? So we don't want to be buying from the 50% retracement level, which is here, but we want to be buying from these zones. So that is a what? A discount zone. These are zones we want to be buying from, and that's a discount zone. So let's see what the price will give us from that zone, and we end up coming. So I told you guys that 50% zone is a meeting point between the sellers and the buyers, and this is where we have a lot of consolidation on board, right? So when you have a lot of consolidation, trust me, you are on 50% retracement level. That's why most of the time, if you don't understand what you're doing, when you can be on 50% zone and the market liquidates you very, very much. So this is what we end up doing, and we end up going high. So unfortunately, we were able to start breaking bars, changing character to the upside, and this was what it is. So market end up liquidating us, right, going upward. So that is what we now call what? A change of character. So market was able to change the character from bearish to what? To a bullish move. So let's take it there, because that was not a proper break of structure. So we are still on our what? On how to use our Fibonacci properly. So in this video, I'm not teaching you how to place your trade, or how to know the right zone to place your trade from. No, what we are here for is what? Knowing how to use our Fib tool properly well. So let's fast forward this. We fast forward this. Okay, now we know that our market is about to do what? To pull back, right? So we confidently take our 2 from this swing high to this swing low. So taking our 2 from the swing high to the swing low, then we are expecting to be buying from all these zones. So not from here, not from here, because these are very cheap price for us. So these are very premium price for us. So this is where we are taking our trade from. Why? Because that zone is what is a discount level we want to be buying from. So we end up pushing low, pushing low, pushing low. Then this is how we end up going high, and bam. Let's see. Yeah, okay. We now have a proper break of structure from that zone. So we call that one a break of structure. So this becomes what? A break of structure. And mind you, this is also what is also a liquidity for those of you who observe liquidity. But anyway, that's by the way, we're not here to treat on liquidity. So we pressed more, we press more, we press more, we press more, we keep moving. Now we have a change of character from the zone. So now when you see a change of character, what do you remember? You pull up your fib tool from the swing low to the swing high. So you want to be buying from what? From a discount level. But sometimes, let me tell you guys, if there is nothing to pick as an order from your zone here, definitely market will end up taking a trade from what? From a premium level and buying. So in this scenario, you can see there is a lot of noises here. So we don't know what the market is going to do, but all we know that we stick to our rules and regulations. So let's see. Market end up coming down. Okay, okay. So we have our highs in place. Okay, and our low is in place as well. So now market is really at a discount level where we want to be buying from, and let's see what the market have for us. So we end up buying from there, thank God. So and we end up having what? A break of structure. So this is how we keep following our order flow, following our order flow. Now we see ourselves moving high. Now guys, this is where it gets so interesting. This is where it gets so interesting. Why? Now take a look at what the market did here, because sometimes some people get so confused, right? So we have a proper break of structure here, and we have another break of structure here. I don't know if you can see it, but pay attention. And I'm going to be teaching you guys this on a different video, not on this. This is a break of structure, and this is what? A swing low. Don't get it twisted. Don't get it twisted. This is the proper break of structure, and this is another break of structure. Now most of you end up being liquidated in such kind of trade. Trust me, when you don't understand how the market moves, you end up being liquidated most of the times. So let's see what the market will do. Now we are at the premium price, right? I mean at the discount level where we want to be buying from according to what we are trading, and we know where our highs and low is already. This is our high, our swing high, and this is our swing low. This is a daily swing low for me. Sorry, I never